Hello, this is Ken Hance, best storyteller in Texas. A couple of sayings of the day. The only thing in life that's certain, death and taxes. And income tax day is right around the corner. It's April the 18th this year, and we'll explain that in just a moment. But Will Rogers said that the income tax code has made more liars out of people than the Goth. And I think he's probably correct. Albert Einstein said the toughest thing to understand in the world is the tax code in the United States. And that was from Albert Einstein, so it gives you an idea. Income tax is your gross income, everything that comes in that's income minus any deductions. You know, in business, you have deductions for all sorts of things. And then you have some personalized deduction like moving expense, and sometimes those are business expense. But it's all the money you earn in the United States and abroad if you're a U.S. citizen. If you're not a U.S. citizen, it's only what you earn in the United States. If you're working outside the United States, you have a deduction on certain amounts of income that come in. It's a little over 100,000. So it was to encourage people to go with their companies to work overseas, and then they don't pay taxes until a certain amount is earned. But today we're going to be talking about income taxes. The tax day is April the 15th. But this year, April the 15th is on a Saturday. So you'd go to the 16th Sunday, 17th on Monday. But the 16th is a holiday in District Columbia, so they moved it to the 17th, and that's the holiday makes them move it to the 18th. Explain that the reason it's the 18th is that the 15th on a weekend, the 16th is a holiday, so that's moved to Monday the 17th. Therefore, income taxes due on the 18th this year. Income tax goes into general revenue. State and local also have some income taxes. Most states in the United States have income taxes. Texas does not. Wyoming doesn't. North Dakota, Florida. So there's quite a few states that don't have income tax. Income tax rates, and I'll come to those in just a minute. But you have the FICA tax, and that's a federal income employment tax that's 6.2% for the worker and the employer. So, that's 12.4% the government's getting plus the income tax. And if you make more than $200,000 a year, you pay an additional 0.9%. So you wind up paying 7.1% on FICA tax, plus your rate, and the highest rates are 37%. So you add that 7.1, you're 44%, plus you have to pay local taxes, property taxes, sales taxes, and you have to pay also for any inheritance or estate taxes. And the inheritance and estate taxes didn't get started until after the 16th Amendment, which was passed in 1911, Congress in 1911 to 1913. And they had been doing an income tax since the Civil War. And the 16th Amendment, they went out of their way to make sure it was legal. They were afraid that it was about to get ruled illegal, and they didn't want that to happen. But federal rate is anywhere from 10% if you're low income to 37%, and plus the percent for your FICA tax. And the gross income is everything you receive. Now, always, when I'm at a restaurant and somebody's waiting on me, I wonder if they pay taxes on their tip. And I think there's a lot of unreported income that people have that they don't pay on. But this is I want to talk about the percent of what people pay. Uh, in the high brackets, you're paying really 44%. But the top 1% of taxpayers in the nation pay 24%, 24.2% of all the taxes paid. 24%, by only 1% of the population. And the next 19%, they pay 44%, 0.6. And if you look at the top 20%, they pay 68.8% of all the income taxes. Really, 69% is paid by 20% of the people. If you put the next 20% in, who they pay 17.6, it's in top 40%, they pay a total of 86%. The top 40% of people paying income tax, they pay 86.4% of all taxes paid. So not even half the people are paying, any income tax. They've gotten the deductions so low that you're not going to pay a lot of income tax if you're making $30,000, a little more, 40. But they've gotten it so low that there's not a constituency there that's trying to hang on to their money. The top 1%, they earn 1.4 million and above. The top next 19% of the top 20%, they'll make 135,000 to 286. And you take a couple that are both working, it's pretty easy to them to get to 135. And the next 25% make between 95 and 135,000. So, a lot of people say, well, the rich don't pay their fair share. They're paying more than their fair share. And it just shows where the income goes and where the income's coming in as far as the United States is concerned. The bottom 20% that pay income tax pay 0.4. They don't pay 1%. They don't, 0.4% is all they pay. And corporate tax rate is 21%. That's gone down. And that at one time, the highest tax rate got to be in 1952. They were charging up to 92%. So, if you made $1 million, you had to pay 92%. You had to pay $920,000. And that caused the Congress to start giving bigger deductions for certain things to encourage people to do things. And the larger deductions, one thing that was Congress decided to do was encourage people to own houses. And so they gave a deduction for the payments, the interest payments that you make on a house. And that encouraged more home ownership. Filling out your tax form, my mother she didn't have a complicated tax form. And there was a guy in Dimmitt, Stanley Schaefer, great accountant, and had a big accounting firm. And he did her taxes for her. And he did it and didn't charge her anything. And she wouldn't go for that. She paid him $5. And, but it wouldn't take him 15, 20 minutes to do her taxes. And she told me one time, there are a lot of these big companies on taxes wanting my business, but I'm staying with Stanley. And I said, big companies, Deloitte or, one of the big accounting firms. And she said, no, it's H&R Block, but I'm going to stay with Stanley. Well, Stanley was a hell of an expert, and I told him that and he got a laugh out of it. But 48% of the population still fills out their own income tax forms. And most people use a CPA. It's, it's very, very difficult if you fill your own out, if you've got many investments. And you can get audited. I think it's, if you go through an audit, they're going to question everything you do. So if if you're paying your taxes and you have some unusual items, then you're probably going to get audited. And also there are some tax credits where if you do certain things, you get a tax credit, which means a tax credit rather than deducting from your income. you deduct it from the amount of taxes paid. One person told me if you put the federal government in charge of the Sahara Desert, then in 10 years there wouldn't be but 5% of the sand left. They'd tax the rest of that and get that. This year we're going to have a deficit of $1.5 trillion. And if you said a trillion seconds, how far that would take you, it'd be 29,000 years before Christ. It's just a huge number. It's hard to even understand. At the present time, the government is spending $1 billion every 2 hours and 18 minutes. And that's, it's just unbelievable. I think one thing for us to remember, we had Senator Phil Gramm on the program not long ago, and he came with his book that gets away from and destroys the myth that the rich not pay any taxes. You take the top 20%, the top 20% paying 69% of all the taxes. Take the top 40%, they're paying 86.5% of all the taxes. What Senator Phil Gramm was saying is that the people making money, the people really working, are the ones paying the taxes. And you take in this day and time, someone can be driving a truck and make $60,000 to $100,000, and their wife's working as an assistant or a policeman or fireman or whatever, making $50,000 or $60,000. Together, they're making $120,000 to $180,000. They're getting taxed pretty hard, and it's people that are working the most. It's very difficult. And when you look at the bottom 20% of people paying taxes, they don't even pay 1% total. So it's a myth, and Senator Graham's book points that out. It's a myth that the rich don't pay any tax. In case you missed our interview with Senator Graham, or you'd like to hear it again, go back in our catalog and look for that episode and go back and listen to it. It's really good. And he and some other people did a complete study on, for example, he points out that they don't count an adjustable income, that if you're getting food stamps and subsidized housing and all kinds of subsidies, that doesn't count. Well, it should count. And that if you're wealthy, that they don't count the fact that you're paying taxes. And so the statistics about whether the rich are paying taxes or the poor are paying taxes by the government is wrong. And he points that out in his book, and it's really worth your time. You see those forms. Somebody sent me one on the internet the other day and said, put down all you earn. Number 2, send this to the government, new tax form. There was a proposal at one time that on capital gains taxes. And capital gains taxes comes about where you sell a piece of property, say a house, and you bought it for $500,000, you sell it for $600,000. You'd have to pay capital gains taxes on that $100,000. And that there was a move by some in Congress, Bernie Sanders was really heading it up, that you would tax capital gains every year, whether you sold the property or not. So if you bought stock and it went up that year, you'd get taxed, not when you sold it, but you just get taxed for holding the stock. And that would be absurd. But it had some support. And when the government gets desperate to spend more money, they'll always raise taxes rather than cut spending. And so that's the reason you've got to have it tied to a tax cut. It's got to be tied to the spending cuts as well. One of the guys in Congress, a friend of mine, said, a promise today is going to be a tax tomorrow. And you look at Illinois and California, New York, some of the states they're in trouble financially, is that people voted for pensions that would go into effect in 4 years or 10 years or whatever. And it's easy to vote for something you don't have to pay for. and the people get the benefit and they love you for it, and you don't have to pay for it. And the next sucker that gets elected, you got to come up with some methods to pay for it, and that they should not be able to do that. But that's one of the reasons some of these states are just in such terrible shape. They put up a system that'll pay great rewards to people in their retirement, but it doesn't set up a method to pay for it. They'd get the benefit. And so that's the reason we have some of the states are really should be in bankruptcy, but are not at the present time. But the day will come they will have to go into bankruptcy. When states go into bankruptcy, it's very difficult for them to sell their bonds. And the bonds do not get a rating of AAA on any state bond in the state of Illinois because it's just it's a gamble. One thing that in debate one time in Congress, one of the members said, a slight tax increase will be like $300, but a substantial tax cut will be $30. They use different adjectives on different tax cuts. Warren Buffett one time said the way to cut spending is to say that when the income is short of the budget by 3% or more, that none of the members can get reelected. And he said that would do something to help move people in the direction of making sure they don't spend too much. I go back to my high school accounting teacher who taught bookkeeping, and she always said, you got money going in, you got money going out. If more goes out and comes in, you're going to go broke. And Jody Arrington, who is the congressman from Lubbock, is now chairman of the budget committee, and he's quoted her several times because he had heard me quote her so much. But Miss Littlepage would be honored that she'd be quoted. But I was in Congress and saw a former member who's now a member of the Senate, and he said, "How's Miss Littlepage?" And I said, "Senator, she's rolling in her grave, rolling in her grave." I had another high school teacher, my teacher, Mr. J.O. Seal. He had saying that if you cut a piece of wire, rope, or string too long, there's nothing you can do about it. But if you cut it too short, you can always splice it. and one of my friends never did catch on to that. He said, "I don't know what that means." One note, and I've gotten calls and texts from everybody knowing that I'm originally from Dimmitt, Texas. Dimmitt, Texas, and Hereford and Plainview, Littlefield, places like that have become the dairy capital of Texas and one of the dairy capitals of the world. And that the California ran them off. It got too difficult to do business because of business regulations in California, and they moved to the South Plains and Panhandle. And that the barn where there was the explosion and the fire was 49 acres. One of the guys in Dimmitt told me it's 49 acres, and that's a hell of a barn. And that it had kind of a perfect day that the truck caught on fire, and the ceiling caught on fire, and 18,000 cattle died. Now, 18,000 cattle, that right there, if you go $2,000 a cow for a dairy cow, which is about right, you're looking at, $36 million just on the loss of that life. And the lack of income coming in has a big problem because your income stopped. They did have insurance. I'm sure there'll be some disagreements on that. But one worker was critically injured and still in critical condition. But it has a huge impact. But the dairy barns now, the dairy cows never go outside. They stay in a barn and they adjust the lights different times of the day. And most of the milking's done by robots. And anytime something with manual labor becomes expensive, people are going to work to come up with a robot. And so they can, it's just like at some fast food places, when you go in, there's a kiosk where you order your food. You're not ordering from a person. You order your food and you go from there. And one guy told me that used them in some of his fast food places he owned. He said they don't ever call in sick. They don't have 2 sick children. They don't get in a car wreck coming to work. They don't have a flat. And they don't ask for higher wages. And he said that's the reason we shifted to them. That's understandable. Well, in closing, the saying of the day, the only thing certain is death and taxes. And there are a lot of other sayings we use today, but that's the most important one for you to always remember that. And the rich pay more than their fair share of taxes.